You want to make money in the stock market, but there are two primary problems. The first one is, what stocks do you choose? And the next one is, how do you know those stocks are worth putting your money into? I am here to solve both of those problems for you by giving you my favorite stocks for June. I'm a financial planner that has managed over $140 million. I'm here to give you confidence, clarity, and momentum. Let's first start with Generac. This company has made 75% in the last 6 months and 119% in the last year. Generac is a power company. They make generators, right? That's the easiest way to put it. And they make other components as well. Now, in full transparency, Generac was not always as good as what you see right now. We have talked about Generac, I would say probably more so 2021, 2023-ish. And they are on their way back. And one of the reasons why that is the case is because of AI, just like everything else. But the US power grid, it ain't all that good. And people are looking for other, more reliable ways to get power to keep the lights on. You've seen how Microsoft has needed AI stuff. They've tried to get their own nuclear plants to power their AI stuff. Again, the grid isn't good. People are looking for other ways. Generac is one of those places. GNRC is the ticker symbol there. Pay attention to it. See how it does in the future. Next here is Nucor. NUE is the ticker symbol here. They're up 57% in the last 6 months, up 112% in the last year. I've mentioned them before. If you missed it, that means you did not hit the subscribe button. This is your chance to do so. We do this about 3 times per week. They are in the mining metal materials space. So go ahead and add this to your portfolio, or add it to your research list to see if it fits in your portfolio. The reason why I think a company like Generac and especially Nucor are important, there's a bigger theory here, or really thesis, if you, whatever, theory, thesis, whatever word you want to use here, is because the stock market is weighed so heavily towards AI, especially once we start to add SpaceX and Anthropic and OpenAI. We're already in a space where more than 40% of index funds are going to be tech heavy. You want to offset that to a degree with companies that are not AI. Nucor is one of those. Okay, Nucor is one of those. So consider adding that to your research list and see if it fits within your portfolio. Next here is KLA Corp, or we like to call KLAC here on this channel. They're up 77% in the last 6 months and up 176% over the last year at the time we're doing this video. The market is live at the time that I am recording this, so you know, numbers may vary at the time that you are personally looking at this video. Next here is a company that we have talked about before, so I'm not gonna belabor the point, but it is one that I have been telling y'all about, and that is Micron. Now, you have likely seen what Micron done did in the last month or so. However, you can check the tape. We have been talking about Micron well before the run-up that most people have seen within that time span. But Micron is up 337% in the last 6 months and 902% in the last year. I still think there is some room for Micron to run. But I just want to say, I will link to that video here. We had talked about Micron before everybody else was talking about Micron. All right. I brought it up. I'm bringing it up again. So nobody says in the comments, hey, you missed Micron, blah, blah, blah. But I done told y'all before that huge jump, you know, the other week or so. Your boy told y'all. All right. Now we've gotten Micron out the way. Let's finish with the other half of the list. But remember, I'm a financial planner. This is what I do. And while investing is not 100% of the job, it is the part of the job that most people focus on the most. And there's a very specific process that I use to go through and select these stocks. And I wanted to make sure that, number one, they were in the top 10% performers within the S&P 500. If you want me to take a look at your portfolio, see what may fit for you, see what doesn't, and do that for free, all you got to do is go to buildingbread.com/callkevin. We can have a one-on-one meeting. We can screen share, see what's working in your portfolio and see what's not working, and take it from there if you want one-on-one advice and consultation from me, as opposed to just general advice that you can get on YouTube and stuff that you can't get from any other, you know, influencer that is out there. Someone who actually does this 9 to 5, in and out for more than 10 years. shares. All right, so next here is Cisco, CSCO. That stock is up 67% in the last 6 months and up 101% over last year. Straightforward tech company investing in more in AI, also cutting staff, which is not great for the average person, but that's one reason why the stock has done so well so recently. I don't know if that's grammatically correct, but you guys get the point here. Now, as we are shifting gears, I want to move towards Ross. Now, of this entire list, Ross perhaps has the least impressive performance. I'm putting that in air quotes because Ross, R-O-S-T, Ross Stores, discount for less. They are, I think that's just their phrase. In either case, they are slogan, I guess. They are up 30% in the last 6 months and up 60% over the last year. Now, when you are comparing one stock to the other, you do have to use context. I'm comparing a discount clothing store to a tech, stock. You're not going to get the exact same performance, right? You need to know that if you are considering your research or you're considering adding that to your portfolio. However, they also have different, let's say, reactions to what is going on in the market. If we were to hit an AI bubble, if we were to hit a recession, if there were to be even more inflation, which one of these do you think is going to be more of a defensive play? Which one of these do you think is going to survive those types of things? Well, I think Ross would be one of those. You want something that if there is a recession, this stock is going to be stable. This stock is going to survive that type of environment. I think Ross is one of those. Also, 30% gains is still good, okay? 60% gains over the year is still good. Now, these don't predict the future. None of these predict the future, but that is what I'm looking at. Even if we are running into more inflation, even if AI is going to be a bubble, right? Now, I don't know the odds of that happening, but if it is, people are still going to be looking for deals. People are still going to be shopping at Ross because prices are high. Gas prices are off the charts. They are going to be shopping at places like Ross. That is why I'm looking at a company like that. And clearly, they have a track record of doing well, 60% in the last year. Got it? All right. It's the advantage of having a financial planner helping you to look and find these deals. Next here is FedEx. FedEx is up 51%, right? Another non-AI company, at least traditionally, up 86% in the last year. So that's another one to keep on your radar that isn't just super easy, pick Micron, pick NVIDIA, and just go there. All right. Next one is Cummins, CMI. Now they are more on the manufacturing side of things, and this was a bit of a shocker. Not a company that at least comes to mind for me. Up 35% in the last 6 months. However, up 111% in the last year. I think for this one, if you're looking at a chart, we're sort of on the earlier phases for this one. So if you get into this one, you might be, still be gaining perhaps a bit more on the early side as opposed to gaining quote unquote late here. Though I don't see any of these as a market timing thing, at least for me. Then you have Applied Materials. Now they are in the tech space. That is up 89% in the last 6 months and up 214% in the last year. So with all these, should you just add them all to your portfolio? What happens next? Because that's the big question that most people ask. I would flip that. First off, who are you as an investor? Ask that question and then start to find the stocks that fit in with that. It's, figure out what shaped bowl you have and then find the recipe or the top, right, that fits on top of that. Because not every one of these stocks are the same. If you're someone who is more conservative as an investor, you're like, hey, I don't like the ups and downs of the market. I want something that is quote unquote safer, right, in terms of the stock market. I'm probably going to go with Ross. If I'm somebody who wants to make as much money as possible, then I'm going to go with something closer to Micron. Those are the two bookends here, right? That is what I would be looking for. You got to decide how aggressive you want to be or how conservative you want to be as an investor. Now, if you want somebody to look at your portfolio and ask you the right questions to figure that out, I will be a financial planner to help you to do that. But that is how I would start to look and judge to help you to figure those things out. I will say, though, that tech companies tend to be more aggressive. Those are the ones that are taking off into space. We can talk about SpaceX, that's going public next week. And then those not in that category, like Ross, perhaps like a FedEx, those are going to be on the quote unquote safer side. Now, stock market is the stock market. There is still risk. These are not savings accounts. Just want to throw that out there. But that is kind of how you want to look at it. And obviously continue to do your own research from here. This is just a primer to show you what's out there, show you how well they are doing now, and then you can look to see if they fit in your portfolio and how much. If you want to know more about the stock market, you want to check out these videos right here.